very good question. POs evolved quite a bit. I think one of the biggest things that I've seen is the investment from private equity. They realize the importance, the high value of these organizations and the need for small employers to have access to tools and resources like this. So what you've seen is a lot of smart money come into the space, making significant investments in the PEO industry to really drive their ability to scale, support more clients in the small employer space, and then also to provide them better tools, better resources, better technology, and access to better products and services. So I think that's one of the big things that's really evolved. That combined with just the challenges employers face on a daily basis, the increasing complexities, whether it's HR, whether it's tax complexities, whether it's around benefits, whether it's around attracting and retaining employees. All of these things are impacting employers and their ability to grow and scale their organization. So anything they can do to help offset that or be able to find a partner that can help ease those issues so they can focus on their core growth and their core business, right? Which is growing the organization, supporting clients, making money, paying their employees. So those things have been a challenge. I think the increased risk of compliance, right? The government is constantly making it more difficult for employers, requiring them to have more things be compliant, requiring them to check and balance a lot more things than they have in the past, and to adhere to new laws. Really, new laws and regulations come out on a daily basis, it seems anymore. So anytime a politician opens their mouth and a new law or regulation comes out, that's something additional that someone at that organization, if they don't have an HR person, is going to have to focus on. The other thing there is, the administration involved with that. That's just a lot of time and effort. That requires bodies, that requires resources and people. Being a non-revenue generating aspect of the business, it's really, it's a cost of doing business. So their labor costs and their labor burden is going up with that. In addition to the cost of labor in general, wages are rising, insurance is rising at an unprecedented rate. So I think what you're seeing there is how can an employer plug and play into a solution, get better resources and access to better tools and products and services? How can they ensure compliance, reduce risk, and lower their labor burden costs? And I think the biggest driver that is really driving this, and something that is going to continue to drive this industry over the next few years, is health insurance. Health insurance has become unaffordable since ACA has come into place in the small group market. So this is a great opportunity to access, rather than small group market products for these small employers, to access large group insurance products through the PEO that have significant size and scale to negotiate with insurance carriers to be able to secure better plans and better pricing than these companies could secure in the small group market, depending upon what state they're from. So I think those are really the things that have evolved over the last 10 years. Where do I see it going next 5 years? I think you're going to start to see more investments in technology. I don't want to, AI is the buzzword, but I think what you'll start to see is PEOs investing in that to find ways to see how they can better increase scale, efficiencies, and compliance, because AI can do all that. So I think you're going to see a lot of investments in AI. I think you're also going to start to see some alternative healthcare solutions, probably a switch to more level funded plans or self-insured plans. Not all PEOs are comfortable with those risks, but I do think you'll start to see some additional changes on the healthcare side, because even though the PEOs provide really competitive healthcare solutions, they're starting to become unaffordable at times. So being able to manage those risks, price those risks, underwrite those risks properly is going to be important moving forward. So I would definitely say HR technology, AI, and health insurance are going to be the main drivers. And obviously, if you're a blue collar company, workers' compensation is a huge driver. And there's actually a lot of PEOs that specifically focus on gray and blue collar companies to be able to provide them really with the support they need from a risk management and safety standpoint, training, OSHA guidance, OSHA regulation compliance, and then also find alternative solutions to the open market or the state insurance funds to get workers' compensation at a much more affordable cost. If you're a trucking company or a construction company or a warehouse, your workers' comp premiums are pretty significant. So anything you can do to better manage those. The other thing with workers' compensation is PEOs offer a pay-as-you-go solution, which means that you only pay for the workers' comp coverage based upon the actual class codes, hours worked, and wages paid for that pay period. There is no deposit. There is no premium financing. So, from a cash flow perspective, if you have a $500,000 insurance policy, you don't have to put a 25 or 35% deposit down. You can do it on a pay-as-you-go basis. So that really helps those companies from a cash flow perspective. Obviously, being able to mitigate that issue, and then also being able to lower the cost and lower the rates for workers' compensation.